Hello everybody. So in today's video, I want to talk about an ETF, namely the Pricing Power ETF by Meet Kevin. And if you've been following this channel for a while, you know that I only do individual stocks. I don't cover ETFs. This is the very first video that I do for this channel after over 200 videos where I talk about an ETF. And why do I do that? Because I'm actually pretty impressed by this ETF. Although I must say, as a disclaimer, I do not watch Meet Kevin's videos. And so I do not really know the philosophy that led him to include these stocks in the ETF. And I think it would be perhaps a better ETF for anybody who is a fan, although this is not investment advice. And I also don't own ETFs. I don't own any ETFs outside of retirement mutual funds, right? Where they force you in your retirement account with your job. You don't have a choice, but you own mutual funds typically. So I'm still not looking to buy an ETF. But if I had to buy an ETF, when I look at the ETF of Meet Kevin's, I see a lot of overlap with my own portfolio. Namely, let me show you. So the ETF of Meet Kevin has 37% in Tesla and Enphase. And if you follow the channel, Tesla is my biggest position. Enphase is my second biggest position, and so I do not know if these stocks are heavily followed by Meet Kevin as well or not. Like I said, I don't watch him, but it's very interesting that the most popular finance YouTuber has in his ETF the two top stocks that I also have in my portfolio, and at 22% and 14%, I would say that he's likely perhaps a little more bullish on Enphase than I even am, which is very impressive. Tesla is actually higher in my portfolio. But impressive. Like, I've been struggling to find an ETF where Tesla is more than 10%. If you go in the ARK Invest ETF, Tesla is always at between 7 and 9% typically. I love this exposure in Meet Kevin's ETF. But when I go on, I see NVIDIA, right? And NVIDIA, I'm preparing a video about whether I was wrong to sell NVIDIA, and I'm leaning towards regretting selling NVIDIA. Meet Kevin's ETF did not sell NVIDIA. NVIDIA is the fourth biggest position. So I'm entirely aligned with NVIDIA and owning NVIDIA in a portfolio. The Trade Desk, I've owned the Trade Desk for a while. I think it's a well-managed leader in the advertising, in the buy-side advertising space. Could not fault anybody for owning that. And AMD, I'm happy to be owning AMD as well. I own AMD. I used to own NVIDIA, regret selling. So when I look at the top 10 position in the Meet Kevin ETF, I am in full agreement, want to buy type of agreement, like want to own type of agreement in 5 out of 10 stocks, which is very rare in an ETF. Like, very rarely do you find an ETF with which you agree so much, and let alone with those weightings, because Tesla is the number one position by a long shot, right? Your exposure to Tesla in the Meet Kevin ETF is about 2.5 times higher than, say, your exposure to Tesla in the ARK ETF, Cathie Wood's ETF, right? But when I look at the other stocks, I mean, sure, I don't own any of these stocks, but aside from one stock where I disagree, which is Intel, I fully disagree on Intel. I wouldn't want to own Intel, wouldn't want to touch it with a 10-foot pole, as we say. But when I look at Apple, I cannot fault anybody for owning Apple. Apple is a tech monopoly. It is a $3 trillion company. They've released a new innovation with their augmented and virtual reality glasses. We'll see where that goes. But Apple is well embedded into the tech sector as a monopoly. That's what I call a savings account type of stock. And I typically look at the QQQ for savings account type of stock, QQQ being the NASDAQ 100. But I don't think anybody could be faulted for owning that, especially in an ETF. If you manage an ETF, you typically have to go with some of these more stable positions. Ubiquiti, I can't really tell much about this one. I don't know this one. It appears to be a steady Eddie stock that has been around for a long while. I love Taiwan Semiconductors and I love ASML, but I don't own them. And many people in the comments have asked me about ASML and Taiwan Semi. Yes, I think they have a great moat. Yes, I love their positioning. They're the leader in their space. I love what they do, but I'm a growth snob, i.e., I'm really, really trying to stick to my 30% revenue growth minimum. And of course, TSMC and ASML do not have 30% revenue growth. Therefore, I'm out because I'm kind of looking for higher growth. But within an ETF, sometimes you have to lower your standards to get the benefits of the ETF. And this is in no way lowering your standards so much that you end up owning something poor. The only thing that I don't like in the ETF is the Intel. I disagree fully on Intel. I think it's a value play, and I'm not a value investor at this point. So what can I say? Well, we're talking about a portfolio where I could get behind potentially, right, with more research, 9 out of 10 of these stocks. And I already know that 5 out of 10 of these stocks I'm 100% behind. And I could easily get behind 9 out of 10, knowing that for the benefits of owning an ETF, I understand why you don't want to own the best, because there's benefits to owning an ETF which you don't have when you own individual stocks. So that is very impressive. And by the way, if you know another hyper-growth ETF that has this much overlap, please let me know, because I haven't found any. So again, very impressive, right? 37% of my portfolio is in the 2 highest conviction stocks for the ETF. So we have 37% overlap here. High quality growth name, NVIDIA, TTD, and AMD. Savings account stocks, decent names, one unknown, one I don't agree. Right? This is really great. I really am aligned with this. What are the benefits? What are the final benefits of owning an ETF? I just want to point them out, because that's the only reason why you would consider, in my view, owning growth plus hypergrowth. Like, I try to only own hypergrowth because I own stocks directly. But if I were to want an ETF because I don't want to do stocks anymore, or I didn't love stocks, then I'd be okay with growth stocks, and this stock as growth stock. But what are the benefits you get? What are the benefits you get for buying exposure through an ETF? Very important. It's the fact that whenever there's a position change within the ETF, it does not bring you tax consequences, right? Once Meet Kevin changes the position in the portfolio, let's say 10 years from now, Tesla is not the biggest stock out there anymore. Let's say there's a new stock that is way more hot than Tesla. Meet Kevin can do a switch in the ETF, sell Tesla, buy whatever stock is the next big stock in 2033, and you don't have a tax event. You don't have tax consequences. When you follow the stock community, and when you look at what happened with people switching from Apple to Tesla, if you follow Tesla, a lot of Tesla investors were Apple investors, right? They were Apple investors, and then they sold their Apple stock and they started buying Tesla stock instead of Apple. Well, when you do that move, there is a tax consequence, right? And depending on where you live, your capital gains, can be higher than 30%, depending on where you live. If that happens in an ETF, you don't have that tax consequence. You just wait and wait and wait until you sell the ETF to realize those gains and pay taxes. And technically, and this fits some of my earlier videos in Beat the Denominator, before I had the 3,000 followers that I almost have now, so I'm very thankful if you follow the channel. But this fits the whole idea that if you have assets, you can borrow against your assets. So if you have very large positions in ETF, you can just borrow against it, right? You can just borrow against your stocks and borrow against your ETFs, like the rich do. And today it's available to the masses, borrowing against your assets. And if you just borrow against your assets, then of course you don't incur any capital gains. And I think if you've been investing for a while like me, we're all in this situation where we don't want to sell a stock because we would have to pay too high capital gains. Like, for example, the trade desk, old position for me. That's kind of the way I am with a trade desk. I'm not selling the trade desk because I don't want to pay the capital gains on the trade desk. And I imagine a lot of people are kind of locked in, say, in their Tesla position. If they bought early, they just don't want to sell it. If there was an ETF, if there was only an ETF that could get to like a 40% Tesla, I mean, that would be absolutely heaven to me in the way I think about investing. So this is the big pro. This is the big pro is imagine for the next 3 or 4 decades, you have a stock of the decade. Can you find an ETF that's going to be able to select the stock of the decade and change its number one position from stock of the 2020s to the stock of the 2030s to the stock of the 2040s and then in 2050 you retire, and maybe you sell it or you borrow against it. Anyways, that's a big pro of ETFs. So that's why I see the appeal. I'm still not buying ETFs, but I see a major appeal. What are the cons of ETF? Of course, the fees. The fees are 0.77, which is the expense ratio, which is high. It compounds, but it's the standard for managed ETFs. And if you've read, for example, the Oliver Jack Bogle books, you will know that fees used to be much higher in the 90s, and actually 0.77 today it seems very high. They used to be way higher back in the 90s, the 2000s. So that's one con, is the fees that you have to pay. And another one is disagreeing with some stocks. But sometimes it's good, because sometimes, you know, it prevents you from selling a stock that you may want to sell by mistakes, and I think everybody can make mistakes, and also Kevin can also make mistakes. So I guess my argument is a little moot here, but nonetheless, sometimes having your stocks in an ETF prevents you from making a mistake. So this is all dependent on everybody's tax situation. So are the cons worth the tax savings, right? That's the question. Is the fees and is not having to actively pick, is it worth the potential benefits of the tax savings? For me right now, based on my personal situation, it's not worth it, but I could see a situation where it's worth it. Also, there's another problem with the Pricing Power ETF from Kevin, is that it is very tiny at 40 million asset under management, so it's not available with every broker, and a lot of brokers are just not going to have it available. But in conclusion, kudos to Kevin. I think the ETF has very high quality stocks, and I think the weightings are really good. Putting Tesla and Enphase on top, I mean, I could not disagree with that. That's like what I keep talking about on the channel. I love these two stocks. I think the weightings are really good. Kudos to Kevin. And I'll conclude with saying that this has a lot to say with the wisdom of the crowd. And, you know, the whole idea is are people on YouTube more aware of stocks than analysts on Wall Street? And the more, and, you know, of course, I think like many of us on YouTube, you know, I've been a silent follower of YouTube for 10 years, at least 10 years. And oftentimes I prefer the analyses of YouTubers. So if that is the case, then there's a lot to say about the wisdom of the crowd, and about people voting with their time, and people voting with who they decide to watch and the content they decide to watch. And so kudos to Kevin. I really like this ETF. It's very rare that I would ever say I like an ETF, but I like this ETF for myself. Obviously, this is not investment advice. This is just my thoughts. Entertainment only. Hope you like the video. Appreciate your subscriptions. Have a wonderful day.